Imagine this. After years of hard work and paying taxes, you finally reach retirement age, only to find the cost of living climbing higher and higher. But now, a brand new tax change in 2025 could mean thousands of dollars back in your pocket. Yes, you heard that right. A new senior deduction could save retirees more money than ever before, and it's already making headlines across America. Welcome back, everyone. Today, we're diving into one of the most important financial updates for retirees in 2025. It's called the new senior deduction. And if you're over a certain age or planning ahead for your retirement, this could be a game changer for your finances. From bigger tax breaks to more breathing room in your budget, this deduction has the potential to put real money back where it belongs, in your wallet. So, let's break it all down. For decades, seniors across the United States have relied on a combination of Social Security, pensions, and personal savings to survive retirement. But with the rising cost of healthcare, groceries, housing, and everyday expenses, many retirees have found themselves stretched thin. Even with Social Security payments, which average about $1,900 per month in 2025, it's often not enough to comfortably cover everything. That's why tax policy, and deductions in particular, play such a big role in retirement finances. The new Senior Deduction 2025 aims to ease this burden. So what exactly is it? Traditionally, taxpayers receive a standard deduction, which reduces the amount of income subject to federal taxes. Seniors, those age 65 and older, have long been entitled to an extra standard deduction. But for years, critics argued it didn't go nearly far enough to reflect the reality of senior expenses. Now, with this new law, the senior deduction is set to increase substantially, meaning that retirees could save thousands of dollars each year. Here's how it works. The senior deduction is increasing by a significant margin. This means older taxpayers will automatically be able to shield more of their income from taxes without itemizing. For example, a married couple over 65 could see their deduction increase by several $1,000s, reducing or even eliminating their federal tax liability. Many seniors live on fixed incomes from Social Security or pensions. Unlike working families, they can't simply take on a side job to cover rising costs. This deduction is designed specifically with them in mind, ensuring that more of their limited income is protected from the IRS. Currently, a portion of Social Security income can be taxed if retirees earn above certain thresholds. By raising the deduction, fewer seniors will hit those taxable levels. In practical terms, that means more Social Security money stays in seniors' pockets instead of going back to the government. One of the biggest concerns for retirees is health care. While the deduction doesn't directly reduce medical bills, freeing up extra disposable income allows seniors to better manage rising prescription and treatment costs. Now, let's talk about who benefits the most. Low and middle income retirees are at the top of the list. These are the people who feel the weight of every price increase. An extra few thousand in deductions could be the difference between covering monthly medications or struggling to make ends meet. Widows and widowers also see benefits. Seniors living alone often have fewer resources but face the same expenses. The new deduction provides relief for single filers too. And future retirees should pay attention as well. Even if you're not yet 65, this change shows a shift in tax policy that favors protecting retirees from inflation and high taxes. Of course, no new tax law comes without debate. Critics argue that increasing deductions reduces government revenue, potentially impacting funding for other programs. Some lawmakers warn that while this change helps seniors today, it could add to the national deficit tomorrow. Supporters respond by saying seniors have already contributed their entire working lives through payroll taxes, and it's only fair they get relief now. So how much could seniors actually save? Estimates suggest that depending on income, some retirees could see anywhere from $1,500 to $3,500 in tax savings per year. Over a decade of retirement, that could add up to tens of thousands of dollars, a meaningful cushion for medical expenses, housing, or simply living with more comfort. What's also noteworthy is the timing. With inflation continuing to affect essentials like food and housing, this deduction is arriving at a critical moment. For seniors worried about how to stretch every dollar, 2025's tax relief could not have come at a better time. But what should you do right now? Stay informed and make sure you understand the exact deduction amount for your filing status. File correctly, because many seniors miss out on deductions simply because they don't know how to claim them. Consulting a tax professional could ensure you get the full benefit. And plan ahead. If you're nearing retirement, this deduction could influence how you save, how you withdraw money from retirement accounts, and how you budget for the years ahead. At its core, this law is more than just numbers on a tax form. It's about giving seniors dignity and financial peace. After decades of hard work, seniors deserve a retirement where they're not constantly worried about outliving their money. So here's the bottom line. The new Senior Deduction 2025 could be one of the most impactful tax changes for retirees in years. It means more money in your pocket, less stress when paying bills, and greater financial security in uncertain times. Whether you're already retired or planning for the future, this is a development worth celebrating and watching closely as tax season approaches. If you found this breakdown helpful, don't forget to hit that like button, subscribe for more updates on Social Security, taxes, and retirement news, and ring the bell so you never miss an important update. Until next time, stay informed, stay prepared, and remember, your financial future matters.